Good morning, everyone. This is a Wednesday morning, and I'm here in a slightly surprised schedule. Rupee has moved to an all-time low. Dollar has gone to an all-time high, and I thought I should come and guide what dollar exporters and importers should do. So let's look at two charts, both dollar INR. That is the most logical chart to look at now. Okay, so this is the onshore chart from 9 a.m. to 3:30 p.m. The dollar INR onshore chart, and I wanted to show you the gaps that have formed here. Okay, one gap has formed around 90.25, 90.30, and the other gap has formed from yesterday to today. Both up gaps. Price have opened much higher than the previous trading sessions range. So that has happened from yesterday to today, and also a few days back around 90.25. Okay, so gaps get filled up in dollar INR, but the situation is such that it's a very different negative psychology time, and rupee is just not stopping anywhere. It is continuously weakening. Okay, so this is the onshore chart. Just wanted to show you the gaps on the daily chart. Now let's come back to the 24-hour chart that we usually look. Okay, so this is the offshore, onshore, both 24-hour chart, dollar INR, and we have been following this every day, a decent uptrend. But what has happened today is that the all-time high, okay, the all-time high of dollar, which was here earlier in December, that has broken today. Okay, so rupee has weakened to a new all-time low, dollar has gone to a new all-time high. Okay, if you look at charts, if you look at technicals, obviously the price is at an extreme. These are the long-term moving averages, the 50-day, the 100-day, and the 200-day moving averages. If you look at these lines, and this line depicts the difference between the price and the moving average. Okay, it's a very good indicator whether the price has reached an extreme or the price is hovering around the long-term averages. But if you look at the subchart here, the prices have reached an extreme. Okay, this was the previous extreme, and this is the new extreme. Okay, so prices have reached an extreme. If you look at the RSI has gone above the overbought 70 figure. Okay, so price has moved to an extreme, but what we have been seeing is that rupee gets under pressure for some reason or the other. If you look at the markets in general, the dollar index is weak. The dollar is lower because of what various chaos that Trump is trying to create. Dollar index is weak. So typically in a weak dollar situation, rupee should have recovered just like the yuan, Chinese yuan, but that is not the case. We are having a lot of FII outflows from India, lot of negativity and pessimism around. So rupee is on a continuous weakening path. RBI is doing its tricks, they are doing some intervention, but obviously they are not going to go against the flood. Okay, now in such a scenario, when rupee has fallen to all-time low levels, risk management becomes very complex. Exporters who have to sell dollars, they see the rupee continuously weakening, and they do not want to hedge. They want to capitalize on the rupee weakening trend. But zero hedge is not a solution. It is a very complex situation. Having zero hedge means all your financial statements, all your revenues, all your budgets, everything will see a lot of volatility reflected as per the spot prices, because you are not hedging anything. Everything is opened and exposed to the current spot price, and as we know, spot is very volatile, so that volatility will get reflected in your financial statements. So zero hedge is not a solution. Okay, so in that case, what should exporters do? Now I have been talking about and recommending vanilla options. Now if you reflect what I have been saying for the last 1 year or so, if exporters would have done vanilla options, then they would have saved a whole lot of money. Okay, you only pay 40-45 paisa for a 1 month option or 60-65 paisa for 2 month option, but in 1 month rupee weakens by 1 rupee, in 2 months rupee weakens by 1.5 rupees. Okay, so you pay that option premium, but the upside is unlimited. If you would have done forwards, all the exporters who would have done forwards in this rupee weakening phase, they would have lost money. Okay, so I'm not saying forwards is not a solution. I'm just saying that in the current trend, forward looks to be an inferior solution. a more better and prudent solution is using a vanilla option for dollar exporters. Okay. Now, what is the case for dollar importers? Now, rupee has been weakening continuously. We have been regularly saying that dollar importers should hedge and hedge using simple forwards, because whenever a dollar importer is hedging, you are paying a 2.5, 3% forward premium, but the rupee weakening is much larger than the forward premium. So, you are anyways getting protected by paying the premium, and you are not getting yourself exposed. You are getting protected from the rupee volatility, rupee weakening. Okay. So, dollar importers must continue doing their forwards. But the question is, at this level, when the rupee is at all time low and dollar is at an all time high, should dollar importers do forwards? Now, that is a very big challenging question. I think in such a situation, dollar importers should also do options. Okay, because here, from here onwards, if rupee recovers, okay, I am not saying it will recover. A lot of technical evidence says that it might recover, and remember, dollar index is weak, dollar is weak. So, there might be a possibility of rupee recovering. RBI can intervene anytime. Remember, they did a swap, they have that ammunition left. So, a lot of things can happen. Markets are very uncertain. But the bottom line, at this level, it's better that importers also do some vanilla options. Once you pay that vanilla option, you know that this is the maximum rate that I pay. Let's take 91.30 plus another 25 paisa of forward premium for 1 month. You get around 91.50 as the strike price, and there you pay around 40-45. So, you know that I will not pay more than 91.90 or 92 rate, the strike price plus the option premium. And if rupee recovers, let's take rupee recovers by 1 rupee, 1.5 rupees, you are able to participate in that rupee recovery phase. If you do a forward, you will get stuck in that rate, you will not be able to participate. Okay, so the bottom line for dollar importers is, please do vanilla options. This is the time to do it. And for dollar exporters, you can do vanilla options plus some degree of forwards to lock in at such prices. Okay, so that is it from my side. Have a great day ahead.